And I don't care if it's a broker, it's a mortgage company, it's a direct lender like we are at Element Funding, or if it is a full service big bank, big box bank.
Okay.
Most of the time, they're going to tell you, do not let anybody else pull your credit.
Yep.
And why is that?
Well, because they don't want anybody else taking your business, taking that business from them.
Absolutely. Okay. So the way this works, when you have your credit pulled, you can have your credit pulled by 3 to 4 different lenders in a 30-day period. And guess what?
It's not going to affect it at all.
We're going to all get the exact same score.
Mm-hmm.
Now, 15, 18, 20 years ago, before the internet, before the world got so small, yes, every time you had your credit pulled, it dinged it a couple of points.
Mm-hmm.
People still talk about that as it's a fact. It's not. But here's the deal. You do 3 or 4 mortgage pulls, we're going to get the same score.
Right.
But if you go and you're looking at 3 or 4 different cars, you're doing 2 or 3 different credit cards, you're going to department store and trying to get credit department store cars, and all of a sudden you have 18, 20, 25, and we see this every single day when people have 18, 20, 30 what they call a credit inquiry
mm-hmm.
in a 30, 60-day period. Now, that will affect your score. So the biggest game in this, because people don't want you to shop, all right? We are a firm believer, I am a firm believer that you should shop for your money.
But you have to shop smart, meaning that you understand the way it works and that you're not just looking at rate. You know, we talk about all the time, what's your rate? What's your rate? You're not just looking at rate, that you're looking at the cost. You're looking at the cost of that rate.
Absolutely. And don't get ahead of us.
Okay, I'm not.
Don't get ahead of us because that's another part of this. All right. So what do we hear all the time when people call us? And it is, first question is always, what's your rate?
Mm-hmm.
But they say, okay, Credit Karma tells me I have a 800 credit score. Or Credit Karma tells me I have a 580 credit score. All
yep.
Right? We've seen it and we see it every day. Somebody says I've got a 680 credit score based on Karma, and they may have a 540 credit score. And then we have people that say, Credit Karma is telling me it's 580 to 600, and it could be 640 or better.
Right.
All right. Credit Karma is a great way to monitor your credit.
Yes, because if someone pulls your credit, you are going to be notified. They're going to show what your payments are. I mean, it's a perfect way to monitor it.
Absolutely.
But don't count on that score.
You cannot count on that score. All right. There's only one way to do that. You need to go, if you're thinking about a mortgage, you need to go to a direct lender, a mortgage company, a lender, a broker, a bank. Let them pull your credit.
And many times you might be just getting one of your scores. We're pulling all 3. There are 3 different scores. There's Experian, TransUnion, and Equifax. And when it comes to your mortgage, we're going to use your middle score. So I've heard people say, oh, well, I have a 680 credit score. Well, yeah, one of their scores may be 680, but their middle score may be 620.
Or because there's, and I can't tell you the algorithms that they use because I don't understand it. Okay. And we're going to have our lady from Credit Technology on the show with us one day to really dig into this. But if you do have questions about your credit, let's talk. All right. The scariest part, and this is with everybody, the scariest part of this whole transaction is getting somebody to pull your credit. And I get made fun of a lot, and I'm going to use this. This is Mortgage Sense. You know where I'm going.
Yep.
It's Mortgage Sense with Kevin. So it's almost like getting naked in front of your doctor. Mm-hmm. Okay. It's always embarrassing. You don't want to do it. All right. And I know I probably just got in trouble for this, but it is personal. It's very, very personal. All right. So you need a professional to go through this with you. Now, for example, this week, in fact, it's now we're in our second week because this guy's actually out hunting for homes now because we got him approved. Mm-hmm. We had a score that he needed only 13 points to get it was a VA loan. We needed a 600 credit score. So we were able to go through and analyze his credit, use our what if simulator, and he had to pay one credit card down 200 points. And guess what happened?
$200?
$200. Okay. He paid his credit card down $200, and in 5 days, we got his score up 39 points, and now he's qualified to buy a home.
So do they have to wait 30 days for the credit report to update to find out if the score's high enough?
No. What we do, but it's called a rescore. We contact the credit bureau. We spend upwards $250,000 a month with the entire company with Credit Technologies. It's the company that we use, and we can get your score increased in a matter of 3 to 5 days. All right. If you wait for it to cycle, yes, then it was going to take 30 to 40 days.
Okay.
But there's no need to do that.
And that's why another reason why it's so important to actually talk to a lender and not use an app or one of these big companies you see on TV, because I think many times it just goes through their systems and boom, you're turned down, where you could be so close. We had another one that just needed 1 point. And I think they had to pay $50 on their Capital One card.
That's it.
And that got them up.
She's under contract right now.
Yeah. Oh, I was thinking about the other couple that we closed that Stacy used to meet at Walmart to get their documents and everything. You know what I'm talking about? I don't want to give out names, but
but it happens every day. But we've got to go through that. So if you just tuned in, you're listening to Mortgage Sense with Kevin, Common Sense Approach to Mortgages. You're on Nuga Radio at 92.7. Of course, you already knew that if you're listening.
Yep.
However, we are talking about the games played in this business. We just finished talking about credit. So if you're interested, if you're thinking about buying a home, call us. You can reach us at 423-488-7571, and I'll walk you through that process.
And as we continue to go through these, if you're listening thinking, I'm approved right now for a mortgage, I'm out looking, but I was told not to get my credit pulled. And some of these fees that we're about to talk about, that's not my loan estimate. Please feel free to give us a call. We are happy to review your loan estimates. If it is a better deal, which usually it isn't, but if it is a better deal, we will straight up tell you.
Absolutely.
We will straight up tell you that, no, you need to stick with this lender. They've got you in a great position, whatever, but it never hurts. If you go to the doctor and you find out something's wrong, what's the first thing you say?
Get a second opinion.
Get a second opinion. So if you are buying a house, let us look at it for you and get that second opinion.
And that's a great point, Beth, because we talk about being an asset to this community. Mm-hmm. All right. I truly want, this is the biggest the biggest purchase transaction that people buy. All right. I want them to get the best deal. And there are times where we may not be the best fit.
Right.
And I will tell them that. I will tell them, you've got a great deal, but we want to go through it all and compare it to apples and show you. So the next biggest game in this business, and we're talking about the 3 major games that are played in this business, is about rates.
Hey, before we go on, what's our rates today?
What are rates today? We get that every day. Every day somebody's calling and say, okay, what are your rates? And we had Brad on our show in Knoxville this week, and we really got into that conversation a lot. There's so many things that go into a rate. It's loan programs. It's down payment. It's loan amount. It's credit scores. All right. But our show is called Mortgage Sense with Kevin, a common sense approach to mortgages. Right.
Mm-hmm.
So we take the Papa Bear approach to this. All right. Most of our clients, I'm old enough to be their daddy now. Okay. And I take that approach to this because I want to give great advice, but you've got to talk. You've got to ask the right questions, because rate is not everything. However, that's what we all want. We want the very best rate. But I can tell you, there are times that the rate will cost you so much more money. And if you're not asking the right questions, you're going to spend a lot more money over time. And it could take you 8 or 10 years to recoup that upfront cost.
And these two games really go hand in hand, because here's what's going to happen. You're going to call someone and say, hey, what's your rate? And they are going to shoot you this low rate that sounds wonderful.
Absolutely.
They're just going to say, 4.875 or 5 or whatever it is, that's going to sound great, lower than anything else. They're just going to shoot it out there. And so you're going to put your application in, and then they're going to tell you, do not apply anywhere else because it's going to hurt your credit, and you may lose your rate.
Right.
And that is how those two games go hand in hand. And then what's going to happen, we're about to talk about this, you're going to get the loan estimate, or hopefully it doesn't wait until you get your closing disclosure, and you're going to see that you paid money for that rate, or you're paying some junk fees that had you shopped around and had you understood the way this business or the way the fee structure works, you could have saved a lot of money.
And we say this all the time because we talk about exposing the games in the business. This is your loan.
Mm-hmm.
When you sit down with this, for example, Jennifer Jones,
who's listening,
Brad Fuquay, okay. Mm-hmm. If they're in my office with one of their clients, and I'll say this, and they've heard me say this over and over and over, it's not about Jennifer, it's not about Brad, it's not about us. It is about our clients, our mutual clients. So we've got to go through that and show them and take that all-inclusive, common sense approach to make sure it makes sense. So National Association of Realtors, what's the average time people spend in their house?
5 to 7 years.
5 to 7 years. It used to be 3 to 5 years. Okay. So we used to say sometimes it's worth paying a discount point if you can recoup that cost within 3 to 5 years.
But shouldn't you have the option instead of it just being thrown in there?
Absolutely. Because this is your loan. All right. So when you're talking about rates and when you're getting involved with rates, and you know what? Call us 423-488-7571. Come to my office. Let me show you the real margins. Let me show you how rates work, because we can lock it on a 15-day. We can lock it 30-day. We can lock it 45 days, 60 days. All right. Believe it or not, we can lock it for 90 days. And I don't want to get real technical here, but you got to think about the financial institution that's locking your rate for 90 days. They don't know what's going to happen in 90 days.
Nope.
Okay. So guess what? There's more margin in it. When there's more margin in it, that means a higher rate. Okay. Because we don't know what's going to transpire in that 90 days. The market could go crazy. Rates could go up. They could go down. And when we lock it, we've got to be financially responsible for you as a client and financially responsible for our bank.
Right.
Okay.
When you go to buy a car, what's the first thing you ask them? You find the car you love, you got the price, whatever, but you always want to see that Carfax.
That's right.
People are all the time insisting on Carfax, which is the right, smart thing to do. But yet we'll go out and buy a house or get a mortgage, a $200,000 to $300,000 mortgage, even if it's just $100,000 mortgage, so much more than that car, but not want to break down what it's costing me.
So the 3 questions that you need to be asking, okay, when we're talking about rates. What are your hard costs?
Yep.
Okay. Now, Beth, I just started my 20th year in this business. I've only worked for 3 different lenders in that 20 years. All right. We all know what our hard costs are. Okay. That's processing, underwriting, doc fees. Okay. And we all know what they're going to be. Those are hard. When I say hard costs, that means we charge those same things regardless. All right. So ask what's your hard cost. The next question you need to be asking is, do you charge an origination fee? You've got to use the word fee, because every day we get that question. What are your rates today with no points? Okay. A point is a true discount point. So what are your hard costs? Do you charge an origination fee? And do you charge a discount point? All right. So here's the deal. Hard cost. Everybody knows them. If they say, well, it depends on this, it depends on that, it depends on what type of loan, say thank you, but no thank you.
Bye-bye.
Bye-bye. Origination fee. Now, an origination fee, and I wish I could remember. I've been trying to think what Brad said that was. He's originating more money for our company. Okay. That is a junk fee. All right. That's over and above money that the mortgage company or the bank or the broker will make. Now, a discount point is a true figure to buy down that interest rate. So rates change 4, 5, 8 times a day. The margins change constantly. So what we do is we want to go through, and we're going to lock for 15 days or 30 days. We want to see what that discount point is, how much it actually is going to be, and how much it will save you over time, to see if you can actually repay that in 30 days or 3 to 5 years.
See if it's worth it.
Absolutely. So let's make a financial decision. So you're listening to Mortgage Sense with Kevin. It's a common sense approach to mortgages. It's a comprehensive approach to mortgages. You're on Nuga Radio 92.7. When we come back, we're going to talk about the third major game in this business. That's the closing cost and the way they structure loan. Beth, tell them how to find the element.
All right. If you want to find the Blair Smiles team, you can call us at 423-488-7571 or find us online at blairsmilesteam.com. You're listening to Nuga Radio 92.7 Mortgage Sense with Kevin, and we will be right back.
Chattanooga Radio. Digital FM 95.3 HD4. 92.7 FM's news now.
The Chattanooga Police Department's trying to find a bank robber. He's accused of robbing the BB&T Bank on Gun Barrel Road, and the police say he changed his appearance drastically after the robbery, shaving his face and changing his clothes. His photos were posted by the Chattanooga Police Department. We shared them on our Facebook page. Cops say kids traveling in a stolen car pointed a gun at an Orchard Knob Middle School bus. Cops found 4 juveniles in a stolen vehicle, and they charged them with reckless endangerment, motor vehicle theft, and unlawful possession of a weapon for one of the kids. A chicken house caught on fire in Polk County. Reports say there were 20,000 chickens trapped inside the structure on Mountain View Road when it caught on fire. They believe it was caused by an electrical panel. The cause of the fire is believed to be accidental. Despite regulation, Airbnb hosts brought in $11 million last year. Russell Stroud, Nuga Radio News Talk 92.7 Action News now.
Sean Hannity, weekday afternoons from 3 to 6 p.m. on Nuga Radio 92.7 FM.
Nuga Radio 92.7.
This is Valerie Epstein of Milligan Reynolds Guarantee Title Company. Locally and independently owned, we've been in business on Cherry Street in downtown Chattanooga for 80 years. When quality matters, our team of 3 attorneys is able to navigate complex commercial and residential real estate deals more quickly, even within 24 hours for cash deals. Let us show you how to save money with a 1031 exchange. Ask a realtor to write us into your sales contract or visit us online at milliganreynolds.com.
Life is complicated. The Salto Agency is simple. And that's something very good to know in a world where insurance decisions are all too complicated. Taylor Salto and his team at Farmers Insurance will work with you to identify the insurance coverage that best suits your needs and provide a custom tailored solution to your home, life, auto, or business insurance. At the Salto Agency, you can get all your insurance in one simple location. Let the Salto Agency provide peace of mind so that you know that you and your family will be cared for properly. Stop by their new office today at 6229 Vance Road, Suite 115. You can reach the Salto Agency online at saltoinsurance.com. That's SOLTAU insurance.com. Let Taylor Salto at Farmers Insurance make your life a little simpler today. Farmers Insurance, the Salto Agency, custom tailored insurance.
As a realtor, you can easily protect both your buyers and sellers with a home warranty. Hi, I'm Beth Kelly with American Home Shield. We're the founders and leaders of the home warranty industry with more than 45 years of experience. American Home Shield has a network of over 14,000 contractors to respond to your clients' unexpected breakdowns. We even offer a rekey service with all buyers' warranties at no additional cost. Find out more about all that American Home Shield has to offer and find us online at ahs.com.
Buying a home is one of the most exciting things you will ever do, but it can also be scary and nerve-wracking. I'm Melanie Moore, owner and certified master inspector with Full Disclosure Property Inspection. Let me help calm those nerves by putting my 37 plus years of experience in the construction and inspection industry to work for you, providing you a thorough, well-explained quality inspection to make sure this home of your dreams doesn't become your nightmare. Call me, Melanie Moore, at 255-1300 or find me online at fdhomeinspection.com.
The Blair Smiles team of Element Funding is your complete resource for all things Chattanooga mortgage. Kevin Blair, Stacy Miles, and the rest of the team work to provide the highest quality and best service found in Chattanooga. And they work by the motto, when we say you're approved, you can start packing. Call them anytime, 423-488-7571. Be sure to ask about their no closing cost program. They can offer up to 100% financing. For more information and useful tools, visit their website, blairsmilesteam.com. And MLS number 151159.
Join We've Got You Covered with Scott Schrader every Saturday from 10 to 11 on Nuga Radio From finance to fixtures, we discuss everything you need to know about buying or owning a home, the pitfalls, the perks, and everything in between. Saturday mornings from 10 to 11, right here on Nooga Radio.
Cloudy, chilly weather continues through your afternoon with some showers pushing in from the west late. Highs lower 40s. Tonight, areas of rain, chilly with some mountain fog, lows 38 to 40. For Sunday, a few morning showers, otherwise cloudy, damp, highs upper 40s with more damp and chilly weather through Monday. Looking to buy or sell a home? Real Living Southern Realty provides real answers and customized marketing solutions. Serving the entire tri-state area, check rlsouthernrealty.com for their complete listings. And I'm Sorgene Walsh, Chief Meteorologist, Pastor 4.
Nooga Radio 92.7.
Hello again, Chattanooga. Welcome back to Nooga Radio 92.7. You're listening to Mortgage Sense with Kevin, a common sense approach to mortgages. My name is Kevin Blair with Element Funding. I've got Beth Mansell with Element Funding. Hello again, Miss Beth.
Hey.
How are you, lady?
I'm good.
You know what? I think we're laying down some good information.
We are.
We are, and we're going to continue with that. If you've just tuned in, we have been talking about the games played in this business, the questions that you need to be asking, whether you're buying and or selling. And we forget sometimes about the sellers that are out there, because the people that are selling their homes, most of them, guess what? Become a buyer. All right. So those sellers, and we talk to our agents a lot about when they're doing listing appointments, they need to be talking to their sellers about being pre-approved as well. Because I'm telling you, and it happens every single month, somebody goes under contract and they can't buy. Right. And that is a sad, sad occurrence when that happens. And it does happen every single month, guys. All right. Let's continue with the games played. The third biggest game. So we've talked about credit. Okay. We've talked about rates. Credit, the biggest one is the people saying, don't let anybody else pull your credit because then your scores will go down and you'll lose your rate. Rates are about hidden fees, hidden cost. All right. Now, closing costs. This is, I think, probably the single biggest one in this industry.
Yep. Drives me crazy.
It is, we've had, and we see it every single week. And I know it's hard for you to believe. We don't get every single deal. Okay. But what we do get, because I'm a firm believer in telling 100% the truth and telling our people exactly what it's going to be when that loan closes. Right. Okay. Because there is a right way to do this business. And when we're taught in this business, and like we said in the first segment, just because we're taught it doesn't mean that it's the correct way. Right. I'll never forget going through or what's called Encompass, which is our loan operating software. We're in a classroom, and this is back when we were at the other company. I asked a question to our corporate trainer. I said, okay, does our aggregate adjustment flow over to our fee sheet? And he said, why would you want to know that? And our boss said, just answer his question. All right. Because I take this loan officer position very serious. When we're out there and we're making an offer on a home, we know when taxes are due. We know what the taxes are. Based on 2,000 loans that we've closed now, I can guess within $5 to $8 a month what your insurance is going to be, especially dealing with Taylor Salto. Exactly. Okay? I know I'll be able to get your payment within $5 to $10. That's pretty close. All right. So when people are structuring loans, the biggest game we're trained in this business to say 3 months of insurance and 3 months of taxes to escrow into your impound account. Now,
I think that only happens once a month?
No, once a year.
Once a year. Once a year.
Once a year. All right. So if you're listening and you're in Chattanooga area, you're in the Tennessee side of the state line. Our taxes are due October 1st.
And you're talking about property taxes.
Property taxes. All right. If you're in North Georgia, your property taxes are due in December. All right. So we have to know when our taxes are due and what happens. And let's take taxes that are $2,400 a year.
Okay. So $200 a month if you
$200 a month. All right. So if you get an estimate and you get that loan estimate that we have to send out to you. All right. Once you start the application, once you find that property, you send that, you get that loan estimate, and it has 3 months of insurance, 3 months of taxes, and those taxes are only escrowed $300 or 3 months, and it's $200 a month. That's $600. All right. Guess how many, if we're closing our loans right now in January, guess how many months have to go in there?
How many?
8 months.
Wow.
Okay.
And that's the way it's going to close.
Oh, it's going to close that way. It is going to close that way. Now, you get one estimate, and it's $600 for taxes. You get an estimate from the Blair Smiles team at Element Funding. That's 8 months. How much is that?
$1,600.
$1,600. So there's $1,000 swing there.
Oh, I'm going to go with the other company.
Yeah, because their closing costs are cheaper. Okay. But the game part of this business, excuse me, game part of this business.
And I already know what you're going to say because I learned this the hard way when I bought my first house. Is that right before closing, you're going to get a call that says, "Oh, the title company just called us, and they had to collect more taxes
had to collect it
because when taxes are due, so you need to bring in this example, you need to bring $1,000 more to closing. Except for in my case, it was $2,000 more,
That's
and
right.
it happens over and over again. You know what I wish, Kevin? I wish when people call to say, "What's your rate? What's your rate?" I wish they would call and say, "How much more will I actually have to bring to closing than what you're going to tell me?" I wish that was the question everybody asked.
You know what? And some of them do. Okay. Some of them do ask that. But why is this so important? Okay. Because when we talk about it being a game, all right, and I'm telling you, Brad Fuquay, one of our great partners that we've done over 100 transactions with.
Yep. He's on the show, last week?
It was
2 weeks,
last week.
no, 2 weeks
2 weeks
ago.
ago.
2 weeks ago.
Okay. We had a closing about 3.5 months ago that his buyer got completely surprised with $3,500. The loan officer actually told him we quoted him lower fees. That way he could win the bid on the house. All right. So at closing, this young family had to come up with $3,500. And you know what Brad said? You should have gone with Kevin.
Oh, same thing happened to my husband last week at the closing table. I told him, I was like, he tried to send it to us, but they had an out of town lender. They're moving in from out of town. And I told him, I said, "This isn't right." And he called me and said, "Guess what? You're right. The day of closing." Did I not tell you this?
No, you didn't.
I thought I did. The day of closing, they had to have $1,000 more at closing. And luckily their father was there and he just whipped out $1,000 cash and the title company took it. But he was like, "Thank God they had it." And he said, he told me, he said, "You were right." I was like, and I love it when my husband says that.
I know. You know, and it makes me sick to my stomach. It really, really does because
I told you that.
No, you didn't.
Sorry. Add that to the repertoire of
absolutely
stories we have of people getting.
And you know, there's I guarantee you, there's realtors listening to us right now that see this happen on a daily basis. All right. And it is so wrong because if let's say that young family or that middle-aged family or that old family, like I'm not going to say Sherry now, I'm just going to say me. Okay. Because I would have got in trouble for that. They may not have the extra money.
No.
And if we're in this business, in this market where we're asking for the sellers to pay the closing cost, let's get exact.
It amazes me that people get so concerned over rate and a difference that may be just $12 a month, but yet they're okay with bringing thousands to closing.
Yeah. Okay. So what happens when they give you the wrong number? It stops the process.
Yep. And you're out of money because you've already paid for the earnest money. You've paid for the inspection. You've paid for the appraisal.
And the sellers have done the exact same thing.
And you've sold your house.
Now, there is a correct way to do it. And what I want for our agents to pay attention to, the agents that are listening right now, start paying attention to the loan estimates that you're getting and that you're going over, because we do realize that the people that are buying homes, they are talking to you as an agent more than they're talking to us.
Mm-hmm.
Okay. And y'all are having to explain and go over. Yeah, Sherry, I see that you heard that.
He stopped himself, Sherry. That was smart.
I did try to stop myself.
You have him trained well.
It's one of those things where they do ask you those questions. And so what I'm telling you as an agent out there, if you see an LE that says 3 months and 3 months, and every once in a while you'll see 4 months and 4 months, I guarantee you 99% of the time, that's the way the LE is going to end up.
Here's what, when you are buying a house, this is what you need to pay attention to. All the third-party fees, you can ignore those because it's going to be the same no matter what lender you choose. The title company's fees, they are what they are. The appraisal is going to be the same. Your prepaids, your escrow account, your taxes, your insurance, that's going to be the same no matter what. You just need to look at the lender fees.
That's right.
Like, I'm so frustrated right now because we're doing a deal where, you know, the one I'm talking about,
Yes, I do.
where we have an agreement set up with the builder as the preferred lender where we're doing a $2,000 credit. And $2,000 is a lot more than what our fees even are, but yet they're telling us our fees were higher, which we're like, we're doing it for free and giving you $800. How's that
That's right.
possible? It's physically not possible, but they think our fees, and I guarantee you they're looking at the title company fees and stuff like that, and they're just not right.
And we're setting up the escrow. I guarantee it's not right because what you're talking about, that deal is not going to close until April, the end of April. Now think about this. So now in April, we're going to be collecting 12 or 13 months of taxes to get ready because right now, let's say this loan is closing in April. All right. So May, June, your first payment. So June, July, August, September. That's only 4 months payments.
Yep.
So we've got to add, are you ready? 10 months of their taxes because you've got to have a 2-month cushion. By law, we have to have a 2-month cushion for your taxes in your escrow account. So 10 months. And on this home that we're talking about, the taxes were almost $4,000 a year. We're talking about a $3,000 or $4,000 swing. And guess what? Their rate was lower than my rate. All right. Now,
Are rates out for April?
no, they're not out for April.
Are you sure?
I'm positive. Okay. And we have pleaded with this young family to let us look at their LE to see, because here's what we want. Okay. And we get this call all the time from our agents. Would you look at this? Let's make sure. I get probably 10 or 15 referrals a year from people that did not use us because they found out that they were getting what we said was the exact truth. All right.
And again, if we look at those LEs and we see that somebody has a better deal, we're going to tell them.
That's exactly
I don't
right.
understand how doing a free mortgage pretty much is going to be. a better deal.
Well, yeah,
I'm sorry, I need to stop.
the numbers just don't add up. Well,
Going back to that, I'm glad we did bring up rate. If because you can lock a rate right now for April.
Absolutely.
Technically.
Absolutely.
But it's going to cost you, just like we talked about earlier.
That's right. It's if you lock it in with what they guarantee the rates, 180 days from now, it's going to be a higher rate. Okay. It's going to be a higher rate. It just works. I've been in this business 20 years. It is what it is. Okay. So if you're listening, if you just tuned in, you're listening to Nooga Radio 92.7. You're listening to Mortgage Sense with Kevin, a common sense approach to mortgages. My name is Kevin Blair with Element Funding. I've got the lovely Beth Mansell with Element Funding, and we are talking about the games. We talk about it every week. And this week, we wanted to come in by ourselves and really get into and dig into those 3 games. And I think we have. Okay.
Well, it's also important to note that the mortgage industry, we are regulated. We all make our money the same. We all buy our money from the same places. So it's not like there's going to be a huge better deal somewhere unless they are charging those origination fees and adding those discount points to quote you a lower rate.
There's only 2 ways to make money.
It is not possible for me, if I'm like ABC Bank, to be like, you know what, I'm going to charge 3% rate and just put it out there because I can.
It's not possible.
It's not possible.
You can't do it. All right. So how do we do things and why do we do things the way we do? Okay. Let me tell you how the Blair Smile teams at Element Funding, let me tell you how we operate and the reason why we operate this way. We have just closed over our 2,000th loan in the last 10 years as a team. Okay. 2,000 loans.
I wish I had like the little sound effects here where I could like do the little clapping.
A little clap. Yeah.
Yay. Woo.
I will tell you, Beth, we've only had 2 loans turned down in underwriting.
0 with Element Funding.
0.
I always add that.
I know. 0 with Element Funding. All right. There's a reason why. Because we get everything up front. Okay. Now, guess what? Things do happen and things do show up. We've got a deal going on with Paige right now. It's a mobile home And the title part of this process, it's a messed up title. Now, we will close the loan. We will get it fixed. And some of those things, some things do happen during the process that
it's unforeseeable.
It's unforeseeable. Okay. But when it comes to credit qualifying somebody and really getting them qualified, we go all in. And why do we go all in?
That way, first of all, 100% that you can buy before you have spent money on an appraisal and that there aren't any crazy surprises. I mean, I think I heard a stat, and it totally might be wrong, but something like 40% of loans get turned down in underwriting.
40% of loans get turned down in underwriting.
And you hear it's almost like going to a restaurant. Oh, the kitchen messed up. I waited tables. It wasn't the kitchen. The server did not put in your order. They put it in wrong. Okay, let me go ahead and tell you right now. And it's the same thing with the underwriters. They should just be double checking and verifying what we have already verified ourselves.
Absolutely. So what we do at Element Funding, we are going to get 2 years tax returns, 2 years W-2s, 30 days worth of pay stubs, 2 months full bank statements. We're actually going to get, and we had to get permission because of the way we do things, because most companies do not do a verification of employment during the loan application process to get somebody pre-approved. All right. So if you come to me today and you're an hourly employee, and we are going to send a form with your permission, we're going to send a form to your employer. They're going to fill it out and they're going to tell us what you've averaged the last 2 years. Because hourly employees, we have to average what you've made the last 2 years.
So at the last 30 days, if I've been working 50 hours, but my average over the last 2 years has only been 40, you're going to go off the 40.
We're going to go off the 40. All
but
right.
So what can happen, correct me if I'm wrong, but so you apply, you're using your most recent pay stubs that are showing the 50 hours, thinking that's what you qualify on. And then people are waiting till underwriting to verify it. And then that's when it can get
beautiful.
You can end up getting messed up.
Are you in the loan business?
I did. You want to know when I got in the loan business, Kevin Blair? I got it in 1996.
So that's exactly why. So when we go through that approval process, it is a true qualified process.
You can start packing.
You can start packing. When we say we're approved, because I will not sign, I sign every letter, and I will not sign a letter until we know 100% that you can buy. And guess what? When you find that house, the closest I've ever been on the closing cost is 3 cents. The furthest I've ever been away, Beth, is $58.
So if you're selling your house and you're getting multiple offers and you see somebody has an approval letter from Kevin, go ahead and take that offer because you too can start packing. And if you're smart, you come to us for your mortgage too.
Absolutely. Absolutely. So why would you need to send in 2 months worth of bank statements?
Well, because sometimes, first of all, if you're putting money down, your down payment has to be seasoned for 2 months. You just can't take it from underneath your mattress. But sometimes there are payments like child support. There can be buy here, pay here places, personal loans, what have you, that did not show up on your credit, but it's showing on your bank statements. And we have to use that for your debt ratio.
Absolutely. And we've got a great company here that employ thousands of people. It's called Volkswagen.
Yep.
All right. So Volkswagen has a great system where they allow their employees to buy cars. All right. And they take that money out of their paychecks. So if we're not analyzing those paychecks and we're just going on the credit, guess what? We've missed $200 to $500 that can kill a deal.
Yep.
All right.
It happens all the time.
I wish I could get a show of hands of realtors that are listening to us out there that have deals that fall apart 2 or 3 weeks into the process or a week into the process.
Well, I'll be straight up honest. That's the way I used to do it. I used to send approval letters out just based off their credit and what they told me their application, how much they made on their application. And then I'd get their docs, send it to underwriting, and all of a sudden the prayers start, and all those uncomfortable calls with calling the agent and calling the borrower and praying you can fix it. And then closings get moved. And that was part of my job back in the day.
Okay. So and I'm glad you said that because you say, and that's why I love having you with me every Saturday.
I used to do it wrong.
No. What I'm talking about is not only as loan officers, most of your loan officers are taking information in, they're not looking at it. But guess what? Most processors out there are just pushing paper. All right. And they're not looking at it. They're depending on the underwriter. That's why everybody blames the underwriters. All right. Because the processors are just taking the information, sending it to the underwriters. We've already said, yes, we're hoping that it works, and it doesn't work. So we've got Christy Hickman. We've got Stacy Miles, and between them both have almost 30 years of processing loans. 30 years. They're not paper pushers.
Mm-mm.
They are analyzing it, going through it, and that's why when we turn it into underwriting, it closes. So now, here's the deal. If you're thinking about buying a home, if you're thinking about selling a home, if you're in the loan process right now and you have questions, call me, 423-488-7571. Let me help you. If you've got a great deal, I will tell you. If you've got something that you need to be asking questions, I will tell you. We take what we do serious. Beth, tell the people how to find us.
All right. Just like he said, you can give us a call 7 days a week at 423-488-7571 or find us online at blairsmilesteam.com or on Facebook at Blair Smiles Team-Element Funding.
Now, you know what I'm going to do next.
Say go Cowboys.
It's Saturday. Okay. The Cowboys are playing the Rams tonight at 8:15. Go Cowboys. Guys, seriously, thank you for listening. Thank you for your support.
Call with your mortgage questions at 8:15.
That's right. No. Y'all have a great weekend. Thank you. Bye-bye.